Retail sales and Home Depot potentially weighing on the markets today. Here's what you need to know before the bell. This morning, Home Depot reported earnings which disappointed the market because, well, starting to show some cracks in the retail side of the business. Now remember, retail sales make up about 40% of personal consumption expenditures, which comprises about 70% of the GDP report. So again, if you're starting to see a slowdown in retail sales activity, that certainly doesn't bode well for stronger economic growth. And of course, one of the things here that's been helping hold the markets up is expectations, or at least hope, that earnings troughed in the fourth quarter of 2022. And we're now starting to see a rise in earnings for companies. And again, if the economy is slowing down, that's not likely to be the case here. So paying attention to what's going on with Home Depot. Later this week, we've got Target, TJ Maxx, and others are going to report earnings as well. So what earnings are coming from these companies will tell us a lot about the economy. This morning at 7:30, we also have the retail sales report, which will tell us a lot about retail sales activity in the month of April. Now, April included Easter, so we may get a little bit of bump in activity because of that, but tax revenue has declined, which suggests that more people are out of work, and it also means lower refund checks to help stimulate spending in the month of April. So we may see expectations of 0.8 be disappointed on the headline number as we start to see a little bit more impact from the retail consumer. Again, that will weigh on the markets this morning as well because, again, of that correlation between retail sales activity and what's happening in the economy as a whole. Again, markets continue to trade in this very tight range here, have not made any real big advance in one direction or the other. Importantly, though, at some point sooner than later, this market is going to declare itself. We have a very defined pattern at this moment of a compression within the market. So this market is going to have to make a declaration one way or the other in the course of the next month or so outside of this range. Now again, which direction this market moves, I have no idea. It'll be a driver. Could be the debt ceiling or lack of a debt ceiling. It could be something entirely different. But that's going to be what's going to move this market out of this very tight channel that we've been in. Of course, over the last 45 days, we have made no progress at all. So it's been a very frustrating market outside of AI stocks. By the way, on our website this morning is an article on the AI revolution. We've been here before. We talk about these AI stocks, the driver in the market, and valuations. That is on our website now at realinvestmentadvice.com. Tomorrow we'll review what the retail sales data says, what that means for the markets. But again, just be a little bit cautious here. We're still on a sell signal, but at that sell signal is trying to turn, but albeit at a very high level, which suggests kind of limited upside to the markets for right now. So having a little bit of extra cash certainly isn't hurtful at the moment. I'm your host, Lance Roberts. Be back here tomorrow, and that's what you needed to know before the bell.